Crypto Hotep here with another investing video. If I sound a little bit odd or maybe this looks a little bit weird, I've had to switch my screen recording software. So I was using CapCut. It's been glitching and network errors and kind of all of that. So I kind of moved to this, I think it's called ScreenPal. So we're testing it out. This is the first video on it. So with that being said, guys, we are back, week 45 on the family portfolio in dividends tracker. Now, if you're unfamiliar with these videos, feel free to go to week number 1 in my channel, and that's where I go over the whole methodology and the thought process behind these videos. Basically, in a nutshell, what I did was I created a short list of stocks for my family members to choose from. They made their selections, and then I proceeded to use M1 Finance as our broker of choice. And within M1 Finance, you can create a big portfolio and then sub portfolios in it. Every one of my family members has his or her own sub portfolio with his or her own stocks in it. Every week, we look at the balance, we look at dividend activity, we look at any buys, we look at any market news, and we just record our investment journey every single week. If these videos are helpful, feel free to like, subscribe, comment, let me know what you think. But by no means is this financial advice. Please consult a professional before you delve into stocks, crypto, metals, anything like that. With that being said, before we go to week 45, we always look back at week 44. At week 44, we had a balance of $1,700.35. We had dividends earned of 29 cents. We had a market gain of negative $2.06. And then we had a weighted rate of return year to date of negative 0.10%. Now, if you're saying these numbers are low, well, that's because we're looking at from a year to date perspective, as we always do, and the year obviously just started. So what happened for week 45? All right, we're boosted a little bit here. The balance is $18,1094. So we hit a milestone, over $1,800 right there. Our dividends earned 88 cents, market gain $12.76, and then money weighted rate of return is up 0.8%. So what actually happened? Now, between this and last week, basically what we are looking at is we had one buy here, and that buy was just in my portfolio and my set of stocks just for Coca-Cola. There was a little bit of money that was just lying around there, I believe possibly from previous dividends. We did have a nice deposit right here. So we had a deposit of $100 here. Now, as you guys know, if you guys follow the channel, you know that our deposits are very small. And the reason we do that is to show that you can build wealth with any type of money that you have. So every other week or so, we honestly just put in about $15 or so every other week, and we have just built our account up from that. And this small account has been built up from I want to say the mid 200s in February 2024 until now we're at $1,800. So as long as you're consistently putting money into the market and letting the market do what it does, then you will be the recipient of the potential gains and wealth that way. So I was blessed that I got a bonus in my job, and we put a little bit of money into that family portfolio, just $100, and we did have some buys. Now, what did we buy? We bought a whole lot of stuff here. So we have Target, Waste Management, Moody's, Celsius. We did buy some Celsius. I can tell you right now that's for my wife. Costco, Nintendo, Visa, Apple, Google, J&J, McDonald's, Tesla, can't have enough Tesla, Pepsi, Starbucks, Amazon, Pfizer, and Aflac. That was a lot. So let's look at the portfolio. And as always, guys, we go bottom to top. Unfortunately, my wife is at the bottom again. But I will say this, I am pretty optimistic here. Her balance here is $143.59. No dividends as of right now. Market gain of 60 cents. Money weighted rate of return is positive, almost 0.5%. So what do we have here? We have Celsius. Again, we've upped our Celsius holdings here. Pepsi, Google, and Tesla. Now, Pepsi's down a little bit over a point and a half. Not really worried about that. Google is burying the load here, up over 6% year to date. And then Tesla almost up a percentage point. Very optimistic with my wife's portfolio this year. I think Celsius, again, is going to be a surprise hit. Let's go to our middle. With our middle stocks, we have a bounce of 195.36, very close to the 200 mark for our middle stocks. Weighted rate of return year to date, almost 5%, 4.95%, market gain of $8.27. No dividends as of right now. That's fine. We do have some dividend makers right here that will be paying out. So we have Starbucks, Target, Amazon, Costco, Nintendo, and Tesla, all in the green. This is a very great site here. A lot of good stocks, but a lot of good price points that we've bought those stocks at. And again, with our portfolio here, we aren't day trading this portfolio, not by any means. We are holding these stocks for years. Years. We are not getting in and getting out of positions. We chose these stocks based on research. We also chose these stocks with how my family feels about certain companies. And we're going to hold on to them because they are good companies. Let's go to our youngest stock. Our youngest did crack the 200, $216.15. No dividends earned as of yet. Market gain of $4.51. And then money weighted rate of return 2.36%. Again, just like with our middle, Nintendo high flyer up over 7%. Remember that Nintendo Switch 2 is coming out, so the market's like that. Tesla up over, just a little bit up over 0.5%. Starbucks, tremendous, up over 8%. And then Apple. Apple has been down considerably over the past, I believe, 2 or 3 weeks now, and we are feeling that currently. So almost down 11% on Apple. Guess what? We are still buying Apple. We are not worried about that. Let's go to our oldest. Our oldest, we have over $600, so $617.26. We did have a dip though, so no dividends earned as of yet. Market gain of a negative $15.77. Money weighted rate of return is negative 2.57%. And this is kind of what we were speaking about this. I want to say we spoke about this maybe 2 weeks ago during the update, and it was just to say, hey, when you have just a focused portfolio, a very simplistic focused portfolio like our oldest, just the 4 stocks here, it works great, right? But sometimes you have to pick the right stocks, because this is a prime example. All your money is basically weighted on these 4 stocks, which is fine. They're fantastic companies, but what if you didn't have a fantastic company, right? So now that lower company is dragging your portfolio down, so it just pays to diversify just a little bit. You don't have to have as many positions as mine, but it does pay to diversify, because now you can hopefully have some of the other big hitters get some of that weight off, and somewhat stabilize that portfolio. But very similar to our youngest, Apple, down over 11% right there. And again, as I mentioned, Apple's coming into this weekly key level. I really hope it holds. It's at about $220. That's where their weekly key level is, and we should see a bounce from that level with Apple next week and the week after. Now, next week is also earnings for Apple, so we're going to see what those earnings are like. We may have a slowish iPhone sales number for next week to report. That could be a little bearish on Apple, but we're prepared to buy at lower prices. McDonald's down over a point and a half. Not really worried about that too much. Okay, and let's go to, last but not least, let's go to my portfolio. My portfolio balance is $638.58. Not bad. Dividends earned 88 cents. You love to see it. Market gain of $15.15. And then weighted rate of return year to date, 2.65%. Now, as far as my sectors go, I will say this. There were a couple good surprises this week that we had. So from a finance perspective, Amex up over 8.5% with Amex. Amex did have earnings come out this week, and they completely crushed it. Amex beat earnings per share forecast, and then also that revenue forecast tremendously. Another one we had was McCormick, the spice company, as I always say. That's in our consumers and staples sector. So as you guys know, consumers and staples and shopping, has several of the known players, and a lot of dividend stocks are here, including McCormick. So McCormick and Spice down a little bit over 1.5 with McCormick, but from a earnings perspective, they did have earnings this week. Again, very similar to American Express. They beat the earnings per share, and then they also beat their revenue as well. And then last but not least, we had Union Pacific. So Union Pacific, if you can remember the railroads, very railroad train company that is in my industrials and energy sector of my portfolio right here. So we're up over 9% on UNP, and UNP also recorded earnings. They had a mixed bag. They beat on earnings per share tremendously, and then with the revenue, I think they were in line with the revenue right here. So not a beat, but it was more in line with. So but all in all, my industrials and energy sector, as I said before several weeks ago, this sector with the new administration in right now, it's going to be going like gangbusters. And I also mentioned watch out for Chevron, ticker CVX, ExxonMobil, ticker XOM. Watch out for these two because they will benefit heavily. And as you can see right now, money weighted rate of return just to this sector is 7.11%. That is tremendous. And with that being said, guys, we will cut this one as of right now, week 45. The balance is $18,1094. So crack the $1,800 milestone in the balance. Dividends earned 88 cents. Market gain $12.76. And then money weighted rate of return 0.80%. As always, guys, if you like this video, feel free to like, subscribe, comment, let me know what you think. And as always, thank you and happy investing. Oh no!